Good morning, all. Hope you are able to hear me.
Good morning, Naveen.
Yeah, able to hear me, right?
Yes, we can.
Okay. Any questions before we proceed? So we have started the basic of accounting, right? We have completed because the thing is, which is required, why we have covered the financial basic accounts is we need to understand chart of accounts, company code, global parameters, the first step, right? Chart of accounts, right? I think I have already given the note for that chart of accounts. So meanwhile, again, I'll reiterate, just write it out, put a heading as a first company code, global parameters, first step, chart of accounts. Right now, chart of accounts. Okay, chart of accounts. Chart of account is a chart of account is a chart of account is a library of GL masters. Library of GL masters. Library of GL masters. Nothing but what the meaning of ledger master. Ledgers are nothing but ledger accounts. Yesterday, what we see, purchased goods for cash. So what are the ledger masters are involved in this particular transaction? One is purchase ledger, another one is cash ledger. Paid rent. What are the ledgers are there in this particular transaction? Rent is one ledger account and cash is one ledger account. Sold goods to ABC on credit. So what are the ledger masters are there in this particular ledger account? Sales is one ledger master and what you call ABC is one ledger master. Clear? So where we will maintain, see all the ledgers we will maintain in one particular book, correct? So in SAP environment, we will call it as a book of ledger, right? Yesterday we saw the books, two books will be maintained. One is to record day-to-day transaction and one is to prepare an individual accounts. So that book in SAP, we will call it as a chart of accounts. Means all the list of accounts, ledger master list will be available in this chart of accounts. Clear? So next item, continue. Okay. GL masters. Library of GL masters. Based on this, we can record. Based on this, we can record. Based on this, we can record all day-to-day transactions. We can record all day-to-day transactions of the organization. And also we can generate. And also we can generate all financial reports. All financial reports related to chart of accounts. Related to chart of accounts. Related to chart of accounts. So yesterday we saw trial balance, trading profit and loss account, balance sheet. So this is most important topic. Okay. Okay. So in this chart of accounts, we have account groups, that is nothing but individual. Okay. Within account group, we can maintain a GL masters. Okay. Within account group, we can maintain a GL masters. Just write down this. You know what do you mean by chart of accounts? Now it's nothing but book of all ledger accounts. Okay. And next one. What do you mean by an account group? See, cash comes under which? What kind of asset? Cash? What kind of asset?
Current asset.
Current asset. So that is nothing but your account group.
Current asset.
Yeah, rent comes under,
Expenses.
it's an expense, right? So
Right.
that comes at, we are going to map chart of accounts. We will create one chart book, and under that account to groups, nothing but rent is an expense. What is my GL master? That is nothing but rent. So that is the structure we have. So just write down the structure. Okay. So in SAP, we can use three types of chart of accounts. Three types of chart of accounts. One is operational chart of accounts. Operational chart of accounts. Operational chart of accounts. Next one, group chart of accounts. Group chart of accounts. Last but not least, country specific chart of accounts. Country specific chart of accounts. Okay. Okay. So here, first one, operational chart of accounts, group chart of accounts, and country specific chart of accounts. And here, operational chart of accounts is a required, mandatory. Okay, required chart of accounts. And the other two are optionals. We can create according to client requirement, or we can ignore them. Optional, correct. And it is also optional. Just write it up. Okay, operational chart of accounts, group chart of accounts, country specific chart of accounts. Operational chart of accounts are a mandatory chart for accounts. We need to create it, right? But these two are according to client requirement. We will give it. We will create it. Okay, just so these two we may create it and we may not create it. Okay, just write it down. So here two methods we have. Again, I am coming back. So we have two methods. One is to N methodology. One is to N methodology. Okay, what do you mean by that? One chart of accounts we can assign to number of company codes. All the member company codes. What are the company codes we have here in our example, in our real-time example, which we have taken? What are the company codes we have taken? Yes.
3 company codes.
What are the company codes?
Adani Steel.
What is the thing we have given? I'll go to the structure. Just kindly remember, don't forget.
Yeah, GU01 something.
GI01, GI02, and GU01, correct?
Yeah.
GI01, Hyderabad based company, GI02, Mumbai based company, and GU01 is US based company, correct? So one is N methodology. So we are going to give, as I said, that AOCA, somebody has created operational chart of accounts. So I have taken GOCA. What is my chart of accounts? I'm taking, for example, GOCA. What do you mean by 1:N methodology? In the sense, one chart of account means one book we can assign to number of company codes. Whatever company codes are, we are going to use common chart of accounts. Common chart of accounts. For example, if I take GOCA, it's nothing but Adani operational chart of accounts. Adani operational chart of accounts, right? So, okay, what are my company codes here? So, or else I'll go here on the Give me a second there. So GOCA 1:n method. Okay, I have GI 01. Next one, GI 02 company code, GU 01. So 3 company codes. Correct? So here GI 01, GI 02 and GU 01. GI 01 is a Hyderabad based company code and GI 02 is Mumbai based company, GU 01 is US based company. So here these 3 different company codes, are using one common chart of accounts. That is GOCA. You can write this. 1:n methodology. What do you mean by 1:n methodology? One chart of account are using by member of all company codes. Member company codes are using common chart of accounts. So that is considered as 1:n methodology. Okay. And we have one more methodology. We have one more methodology. 1:1 methodology. What do you mean by 1:1 methodology? Each company code is having individual chart of accounts. Okay. So for example, GOC1, GOC1, GOC2, Adani operational chart of account 1, Adani operational chart of account 2, GOC3. I'll take in a different next line. One is to one methodology. Okay, what do you mean by 1:1 methodology? GOC1, GOC2, 3 company codes are using 3 different chart of accounts. GOC3. Okay, 3 operational chart of accounts. Okay, so what are the company codes we have? GI01, GI02, GU01. Means each individual company codes are using their own chart of accounts. Instead of using common chart of accounts, they are using individual chart of accounts. Yes, Pawan, please go ahead.
We are using 2 types of chart of accounts. We are saying that for individual chart of accounts and group chart, other type of chart of accounts, and we can use for the different company codes.
Correct.
Is there any specific reason?
I'll explain
in which
that.
condition-
Why we are going to you? What is the difference between operational chart of accounts, group chart of accounts, and country specific chart of accounts? I'll
Okay.
explain that.
Okay.
Okay, but what
Okay.
the methodology, how many methodologies we can use chart of accounts in the sense, there are 2 types of methodologies. One is 1:1 methodology, another one is 1:1 methodology. Means one common chart of accounts we are using for GI01, GI02 and GU01. Clear? So what is the advantage? Why the companies will go for 1:n methodology? When the companies are going to use 1:1 methodology, that I'll explain.
Okay. Okay.
Next one. Let me do this. Just write down this picture first. I'll explain everything. Just write down as it is. Once you are done, let me know. 1:1 methodology, 1:n methodology. Once you're done, kindly let me know, please.
Done, sir.
Write down a note. Write down a note. Write down a note. Operational chart of account. Below, write a note. Operational chart of account. Operational chart of account. And country specific chart of accounts. Operational chart of accounts and country specific chart of accounts will be assigned to company code. Will be assigned to company code or company codes. Whereas group chart of accounts will be assigned to operational chart of accounts. Will be assigned to operational chart of accounts. Understood? Operational chart of accounts and country specific chart of accounts assigned to operational chart of accounts. Okay. Understood this?
Yes, Naveen.
99% companies will go with 1:n methodology. Remember this. What does it mean actually? Why they will go with the 1:n methodology? What is the advantage? 1:n methodology in the sense, for example, I am having 3 company codes which are situated in different countries or different places. So here, if I am using one common chart of accounts for all the 3 company codes, and one more thing, we have not covered that physically here, but still before that, what I would like to tell you is, if any company, whatever company codes are using, if they are using common chart of accounts, common operational chart of accounts, common operational chart of accounts. Okay. And sorry, common chart of accounts. You can take it as a common chart of accounts. And the same thing what we have reiterated in the last before sessions also, common chart of accounts and common fiscal year, nothing but common financial year, fiscal year variant. Okay. Then if any company, whatever three company codes are there, they are using chart of account as an Adani operational chart of account. What is this chart of account? Adani operational chart of all the member three company codes, GI01, GI02, and GU01. Okay, this chart of account is directly linked, operational chart of account is directly connected to company codes. So with this, what is the advantage in the sense? Intercompany transactions are possible. Cross company code transactions are possible. Cost transfer from one company code or revenue transfer from one company code to another company codes are possible when the chart of accounts and fiscal years are common. The currencies may be different. So here I am following April to March for this company code. For this company code, I am following April to March. And for this company code, we are using same April to March. Right? Then we are using common chart of accounts, common fiscal year, and here currencies are, this is for INR, this is for INR, and this is for USD. So currencies may different, right? When intercompany transaction or cross-company code transactions are possible in the sense, all the member company codes are using common chart of accounts. Okay, then only it is possible. Right? So majority, whatever whatever companies I saw, majority companies will follow their chart of accounts in 1:n methodology. You remember we discussed in the controlling area also 1:n methodology. One controlling area to number of company and company codes. You remember that? Right?
Yes, sir.
In the same way, what is Adani Group chart of accounts in the sense? Whenever we have different company codes, okay, and their chart of accounts are different. Their chart of accounts are different. They want to maintain their own individual chart of accounts. And they want to maintain different fiscal years. Right? As I said that we have a company code GI01, GI02, and GU01. These two GI01, GI02 are country specific, nothing but Indian country, India company codes. And this belongs to US, right? So these are country specific chart of accounts, means whatever Indian chart company codes are there, we will assign to country specific chart of accounts, means the rules and regulations of each country may different, right? So according to that, we prepare country specific chart of accounts, and here we are preparing GUCA, that is nothing but US chart of accounts. And the chart of accounts are also operational chart of accounts. For GI01 company code, we are creating GOC1, and for GI02, we are creating GOC2, and GU01, we are creating GOC3. Means here, all the three company codes are using different chart of accounts, not common chart of accounts, right? So what does it mean? What does it mean? So here in this, whenever they are using different chart of accounts, then the intercompany transactions between GI01 to GI02, GI01 to GU01, GI02 to GI01, GI02 to GU01, GU01 to GI01, GU01 to GI01, transactions are not possible. Intercompany transactions are not possible between these three company codes. Is that clear? Any questions here? So majority will go for 1:n methodology. Whatever projects you are going to handle as a consultant. So we need to give a knowledge to our client. You will get from your client only the information. Clear? In their earlier existing whatever legacy systems they were using, they will have different methodology. Right? If they are using Oracle or JD Edwards or any other ERPs or any accounting software, they have a different methodology. But you should have a knowledge. What is the difference between operational 1:n methodology and 1:1 methodology? So at the time of, for example, you got the position as a lead consultant or a senior consultant. So sometimes you need to present. Means before implementation, you need to give some inputs regarding to-be document. When we prepare our to-be document, means as is document, to be document. We saw what is as is document and what is to be document. So as is document, how the business is working currently, and to be document after implementation, how your business is going to work, use this particular software. At that particular point of time, we are going to explain this 1:n methodology and 1:1 methodology. Then your client will come. We have a intercompany transactions. So which one you advise to proceed? Your client will come with that query. Then we advise them 95, not 95. I will say 99%. Because the current modern new GL, when the new GL accounting came into the picture, right? So we know that what is the difference between a classical GL and a new GL concept. In new GL accounting, we have a dynamic reporting. So we can have thousands of reporting like local GAAP reporting, IFRS GAAP reporting, US GAAP reporting, Australian GAAP reporting. According to country, we can generate different reportings. And one common reporting we can generate when the new GL account was introduced. Is that clear? Any questions? Any questions? Here, so this is an optional. Country specific and group chart of accounts are optional. Clear?
Naveen, one
Yes, please.
question here. 99%.
A bit louder, I'm not able to hear you.
Can you able to hear me now?
Yes, yes, yes.
Yeah. So 99% 1:n methodology we are using globally. So what is the purpose of having 1:1 methodology? In which scenario is there any scenario
Yeah,
that
that's what I said. See here, for example, I am having 3 different company codes. Why 1:n methodology? In the sense, I would like to transfer my cost from one company code to another company code. Or here I am doing some sort of raw material, and here I am using finished goods in this particular company code. So I want to supply this raw material to this particular company code. And I want to
Yes,
give services from GI02 company code to GU01 company code. Clear?
yes, I got it. 1:1 methodology will help us in moving the funds from one company to another company using moving the funds. Goods,
Again, a
everything
bit
from
louder,
one-
please.
Yeah, I'm in 1:1 methodology. We can transfer the funds, goods, materials from one company code to another company code
Correct.
easily. But what is the purpose if there is a 1:1 methodology? In which scenario is there any scenario
Yeah,
that
see,
any company using
yeah, exactly.
one
I got
methodology?
it. See, why this particular 1:n method? Whenever I want to have a group reporting. Understood? If I want to have a group reporting, then this 1:n methodology will help us. Because all will be, all the expenses, all the revenues, right? Everything will be recorded at this chart of account level. So it is easy for us to retrieve the reports. Whatever reports we want, we can generate the what we call consolidated reports at this 1:n methodology. But when it comes here, so what is the disadvantage in the sense we have a different chart of accounts here. Clear? And we have a one group chart of accounts. So what are the things we need to do? First, we need to consolidate country wise, right? Consolidate, we need to consolidate the reports as per the country wise. And after that, we whatever common countries are there, then we can consolidate operational chart, company code wise. And after that, we need to consolidate operational chart of account wise. And after that, at the end, we can consolidate at group chart of account level.
Yeah, got it.
Got it?
Hmm.
Yeah. The main purpose, the advantage here, see, the same thing is intercompany transactions are not possible, right? When this particular company codes are related to, for example, Reliance group of, as I said, that Adani group of accounts. So Adani is maintaining, Adani is into steels and cement. So at the end, my Adani group of company wants whether they are running into profit and loss. I want to check, right? So if I am using different operational chart of accounts and different country specific chart of accounts, different company codes, right? Different company codes will be there as usual. But Adani Group, if I want to check whether Adani Group is in profit or not at operational company code level, I want to check at corporate level. Then because the data is flowing differently, not commonly the data is flowing. Right? At that particular point of time, getting a consolidated report at corporate level will be a challenge. Right? And this particular transactions here, if I'm doing a transaction between GI01 and GI02, then this particular transaction will become a third party transactions. So what is the other disadvantage? What is the advantage between intercompany transactions and third party company transactions? If we are doing intercompany is also we can sell and purchase between intercompany here. Here also we are doing intercompany transaction. Why we need to have the same question I am asking now? In the sense, whenever we do intercompany transaction, then we need not to pay any sort of taxes. But here you are using it as a third party transaction, even though these are members of Adani Group of Industries, because they are not using common chart of accounts. So in between whatever transaction take place between GI01 to GI02, GI02 to GU01, then we need to generate a tax invoices. So here where we can save here. Hope you got my point.
Yes, Navin, I got it now. Because the tax point will
exactly.
come in, right?
So why? Because 90%, 95% companies will go for this in the sense, however, tax would be a challenge.
Yes, got it.
So just write it down. Any other questions from anyone?
Sir, when we gonna practice this, do we gonna practice in 1:n and 1:1 as well? Or just
1:1 we will see later sessions. Initially, we will go with the as I said that first practice. If I do both together, then we will have a lot of confusion. Hope you got my point. Once we do the intercompany transactions, then I'll take 1:1. It's very simple actually. 1:1 methodology, we don't have any intercompany process. The assignment, the process, and everything will be the same. What we do in 1:n methodology and what we do. But here we will do intercompany transactions. Here we won't do intercompany transactions. Clear? So, but once we do intercompany transactions, I'll explain 1:1 also, because it won't take much time to explain. Explanation part I have done, but configuration part I'll show you. Clear? Any questions?
Makes sense. Thank you.
So again, the client to client, we may differ, we may get different. Okay, then next we will see the configuration part. Right now, chart of accounts. If someone is asking you the same question, like why 1:n, in the sense, you need to answer the same cost for tax purpose. Okay, just write down. Just write down the path. See, just write down this. Just write down this. We have two modules here in SAP FICO, correct? So here we have GL accounts, and in CO module, we are going to call it as an elements. We are going to call it as an elements. Okay. So here in GL accounts, we have a different set of accounts. One is a liability accounts, one is asset accounts, income accounts, and expense accounts. In GL FI module, we will call it as an account, and in CO, the same account, we will call it as an elements. Okay. Right. Whereas in cost, we have only the expenses and revenues in CO model. We want to discuss about assets and liabilities. We won't discuss about assets and liabilities. Clear? So here in GL accounts, we have a liabilities, but there is no element in CO module because we won't discuss anything about liabilities. So no elements will be moved. The liabilities elements will not move CO. Okay. Next one, we don't have assets in CO module. So in GL module, in FI GL module, we will call it as an assets. And here in CO module, we don't have. So we will call it as a no elements. Next one. In FI module, we will call it as a incomes, nominal account, debit all expenses and losses, credit all incomes. So here in FI module, we will call it as an incomes. Okay. But in CO module, we are not going to call it as an income. We will call it as a revenue elements. Revenue elements. Yesterday we discussed income, revenue, profit. Correct? So, and again, here we call it as an expenses. In FI module, we call it as an expenses. But in CO module, we won't call it as an expenses. We will call it as a cost elements. So that is the reason we call it as a not expense accounts. We will call it as in CO module cost element accounts. Cost element accounts. So I'll explain each and everything here. So write down first one. Define chart of accounts. We will see the configuration step. Define chart of accounts. Write down the path. SPRO. SAP reference IMG. Financial accounting new. Financial accounting new. General ledger accounting new. General ledger accounting new. So why I am calling here as a new in the sense which is having a new methodologies are introduced. That is nothing but from ECC 6. Okay. EHP 7. So earlier we have a 4.6, 4.7. So over there only GL debit equals to GL credit concept was there. But now we have a GL plus what are the other elements we have? GL account debit, business area debit,
Segment,
sorry,
profit segment.
profit center plus segment. So we can generate different entries, different reports. Okay. So that is the reason it is introduced as a new. So general ledger accounting new. Master data. GL accounts. GL accounts. Preparations. Preparations. Edit chart of accounts list. Edit chart of accounts list. This is very important transaction code. OB13. 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 Okay, OB13 is the T code, transaction code. Okay, let me go with the configuration. So SPRO, SAP reference IMG, SAP reference IMG, right? So here financial accounting new, financial accounting new. Next, general ledger accounting new. So what does it mean? These are the different modules here. All modules, right? So general ledger module, accounts receivable and accounts payable module, contract account, FICA. Okay, finance and contract accounts, bank accounting, revenue accounting, asset accounting, lease accounting, right? So these are the different sub modules in financial accounting. Okay, So here, first module, the basic module, the important module, right? We are handling is general ledger accounting. Without having a knowledge on this GL module, we can't handle other modules. Is this clear? So this is very important. If you know end to end of GL module, then we can handle all these modules easily without any problem. Right? So general ledger accounting new. General ledger accounting new. Next one. Master data. Master data. Next. So all the master data will be prepared for GL accounting in this only. Profit center master data, GL account master data, all will be maintained, right? GL accounts. Next, preparations. Preparations. Edit chart of accounts list. Edit chart of accounts list. So how to activate the transaction code? So you can see here, edit chart of accounts, OB13. OB13. Okay. So here you can see edit chart of accounts list, OB13. Okay, OB13. Again, I'm reiterating, put a star 3 mark for this particular transaction code. So click on IMG activity button. Click on IMG activities. So click on new entries. So let me check. New entries. Okay. So what is the chart of accounts we want to create here? GOCA. So we are first initially, we are going to do initially in the sense, the complete till intercompany transactions we will follow 1:n methodology in this particular project. So GOCA. GOCA already there. This is the problem. Let me check here.
That's Godrej, sir.
But still we can't use GOCA. Even though it's a Godrej, we can't use because already this particular chart of account is already used. I'll use HOCA, even though. So after that, I'll change everything. I'll delete and I'll maintain our own, the same thing, Adani group. I'll do it. Okay, but for your understanding, you can use any terminology. So here I'll use it as an HOCA. So by tomorrow, I'll try to make a changes. I'll whatever additional things people have created, that I'll from my end, I'll delete them. Fine. So I'm taking here HOCA. Okay, HOCA. So give the description.
Naveen, I have a question.
Please go ahead.
This codes that we are generating, it's a temporary
Sorry.
for the codes like we are generating HOCA or GOC2. It's for the practice module, or it is in the live scenarios also the codes.
No,
like
you
will
won't
be
find in
same.
live scenario, it will be blank slate. Correct? So whatever naming conventions your project lead or project manager, as per the client requirement, your project manager will prepare the naming conventions. Understood? So here your Adani is your client, for example, right? So here your client want AOCA, correct? Operational chart of account. So here in this system, you are able to see these many, right? Right? You won't find these many, not these many, nothing you won't find. It will be a blank slate. So you can create anything according to your client requirement.
So we need not to remember all these codes, right?
No, not required. Naming conventions will, transaction code you need to remember, but This naming conventions you need not to remember. The naming
So do we
convention
have
will be given by
do
your
we have-
project lead or project
do we
manager.
have a list? I got that. Do we have a list of this transaction code where we have like
You have to write
that
it down
one?
in your notes. That's what I said.
So because
If you
the
Google
notes are
it,
getting jumped.
that's what
I
I'm
got
saying.
your point.
I won't give you at a stretch list. Seriously, because it will take in a deviation. It will take into deviation. If you practice, again, I'm telling you the day, last session also, only the get success in SAP is only the practice part. So if I give the list, only you will mug it up that list. Right? So instead of that, if you follow the step sequential order, first, whatever we did from day one, if you follow the sequence, then definitely if you practice for 20 to 30 times, definitely you need not to mug it up anything. You will remember everything. There are almost 1800 transaction codes are there in FI module, more than 1800 transaction codes. So that is the reason every transaction code, I won't say important. Right? For few transaction code, I'm asking you to put a star mark. So only in FI module, we have a more than 1800 transaction codes. Overall SAP, we have a more than 65,000 transaction codes. So how many we will remember? If I give you the list also, you can't remember them. Clear? With the practice only we will remember.
My point was that if we have some specific codes that we are using on a daily basis, because if 65,000 codes are there, we will not be able to remember every code. But
Okay.
if we have some specific codes that we are using on a regular basis on the live scenarios,
See it again. See,
that was
live
my point of
scenario in the
asking
sense.
this question.
Yeah, let me finish this. Live scenario in the sense you can't see you're doing a practice, right? So in live scenario, you want to get a specific project. Correct. So how can I say if you practice this list of transaction codes, then it is useful. Here you will be get only implementation for AP, or you may get only implementation of AR module. Only you will get a chance of GL, or you may get end-to-end implementation. Right? If I say, okay, you can use only this transaction code, you can remember in the sense, then I'm taking you to in a wrong way. Because in the practice part, we need to remember everything. Right? So we don't know what kind of project you are going to get once you stepped in, once you crack your interview, once you onboard it. We can't say you may get implementation product. In that implementation also, you are restricted to only one specific area. Right? Only AP. For example, you are good enough, good luck, your luck is good, then you are implementing only AP, accounts payable module, or you are implementing only GL module. You're implementing only AA module, asset accounting module. But you may get chance end-to-end implementation. Nothing but you need to cover from scratch to till end of FI module. Hope you got my point.
Yeah, got it.
So here, don't depend upon mug it up kind of thing. If you have all the list of ledger account, all the list of transaction codes, you can Google it. What is the FI transaction code? You get all the list. Complete list. But according to me, whatever experience I have, whatever I am looking at from my interview or whatever perspective, we don't depend on those specific transaction codes at initial level. Once you enter into onboarded and once you start your project, then definitely you will come to know what kind of transaction codes am I going to use for entire project. But till that, we need to have a good practice, good knowledge on all the transaction codes. So that is the reason I'll mention clearly here, this is an important transaction code. You can note it out. So as I said, the chart of accounts, yeah. Okay, next one. Description. I'll write it as an Adani operational chart of accounts. Adani operational chart of accounts. Okay, So here, this is a description, Adani operational chart of accounts. And next one, maintain language. So we will have a number of different language across the globe. So total 41 to 46 languages. So we can select here English. All international languages will be there. So length of the GL accounts. Length of the GL accounts, we can give maximum of 10 digits. Maximum of 10 digits. So instead of that, what majority company codes will do is 6 digits, 1 lakh to 1,99,000, 2 lakhs to 2 lakhs, account to groups. So the GL accounts I can use for rent, I can use so number, right? So cash account, I can give one ledger account, specific ledger account, like your bank account. How you be, once we open a bank account, there will be a specific format, specific number. Clear? In that way, we can use from 1 to 10. One digit to 10 digits. But normally, whatever things I have saw, either they will have 5 digits, 6 digits, 7 digits, or 8 digits according to the client transactions. The numbers will be fixed. So again, this we are not going to take a decision in real-time project. Your project lead, according to client requirement, right? How many accounts they are going to have. So according to that, they will take a decision. What would be the length of your GL account number in real time? Clear? So they will say that, okay, 8 digits we need to have because the volume of transactions are this much. So according to that, they will give. So here, normally majority, again, I'm telling you, they will use 6-digit number, right? They will start with 1 lakh and ends with 9,99,999. So here I am taking 6 digits in the complete entire project. Just write it down. 6 digits. So which methodology we are going?
1:n.
1:n methodology. So here, do we require any group chart of accounts?
Not required.
Right? Do we require any group chart of accounts here? Because already we are Adani HOCA and we can assign to company codes, correct? But here, when group chart of accounts are required, when this is my group chart of account, right? When this is my group chart of account, right? When is my group chart of accounts are required? When we follow 1:1 methodology. Got my point? Hello?
Yes, Naveen.
Yeah. So here we are following 1:1 methodology, 1:n methodology. So group chart of accounts are not required to create here. But if you are creating 1:1 methodology, then first here you need to create your group chart of accounts. That is nothing but this particular thing, GGCA. And after that, under GGCA, you need to create chart of accounts like this one, GOC1, GOC2, or HOC1, HOC2, and HOC3. Clear? So here it's not required to create our group chart of accounts. However, we are doing operational chart of accounts 1:n methodology. Clear?
So Naveen, if it is in 1:1,
Sorry.
then if we are following this 1:1 methodology,
I'll explain that
Yeah.
again. I'm telling you, right? I'll explain 1:1 methodology also. But when? After completion of intercompany transactions. Right? But meanwhile, why we are not selecting group chart of accounts here? Because we are following which methodology? With methodology.
1:1.
1:n methodology. Whenever we are using we are following 1:n methodology, we don't require to use group chart of accounts. But whenever we are using group chart of accounts, okay, then 1:1 methodology, then group chart of accounts are mandatory. First, here we will create a group chart of account and we will mention it as an Adani group chart of accounts, whatever English 6, and I'll say this about this also. The next we will create same with the same transaction code. We are going to create chart of accounts. So we are going to create chart of account as a GOC1. So here we will select GOC1, Adani operational chart of accounts 1, Adani operational chart of accounts 1. And what is my group chart of account here? Already created. This is GGCA. So here I will give GGCA. So that I am integrating HOCA1 or HOC1 or GOC1 to my group chart of accounts. So that I will take in a different class once we complete our intercompany transactions. Any questions?
Yeah, got it.
Right. So in group chart,
Sir, what is manual creation of
I'll tell you
cost
that.
elements?
I'll
What
tell
is
you.
that, sir?
That's what I'll tell you that.
Okay.
So as of now, 1:1 methodology, 1:10, it's not. Just till here, write it down. Don't write down control integration. Don't write down this. Till here, just write down. Till here, just write down. Once you're done, let me know, please.
Yeah, done.
Okay. You remember this point? Okay. So here you remember just now I said in the before starting chart of accounts. So in FI module, we have a GL accounts but in CO module, we will call it as an elements. And liabilities, we don't have a liabilities and asset accounts in CO module. Clear? And incomes we call it as a revenue elements, and expense account we call it as a cost element. So here we have a two options. Okay. So if I select the manual creation cost of elements, and next one we have automatic creation of cost element. If I select manual creation of cost element, so what does it mean? So there are two consultants will be there in this particular project. For example, one is FI consultant separately and CO consultant separately. So whatever GL accounts are there, okay, that will be prepared separately by FI consultant. So they will create liability accounts, they will create asset accounts, they will create incomes account, and they will create expense accounts. Understood? Who will prepare these accounts? Who will prepare? FI consultant will prepare. Okay. If I select automatic creation of cost elements, then what happens is we don't have a separate controlling module consultant. We are working as a FI consultant and we are working as a cost controlling consultant. Then what happens is we are selecting automatic creation of cost elements. Means so whatever data, whatever GL accounts we are going to create, like liabilities, assets, incomes. So the liability data will not flow from FI to CO module. Assets will not flow from FI to CO module, but incomes data, incomes accounts will move as a automatically. It will move from FI module to CO module as a revenue elements. It will automatically move. Okay, why? Because we have selected here automatic creation of cost elements. Means whatever incomes we are going to create, whatever incomes ledger accounts we have created, for example, commission received account, interest received account, right? Like the discount received account. So all those accounts, whatever we create in FI module, that will move automatically with the same numbers to controlling module as a revenue elements. And expenses accounts will also move to CO module as a cost elements with the same number. So when we select automatic creation, but if you are selecting manual creation of cost elements, then what happens is whatever data, the account data, GL accounts data is there, that will not move automatically from FI module to CO module. So FI consultant will do is GL accounts separately, and CO consultant will prepare their accounts, their elements separately. That is the reason we call it as manually FI consultant will prepare. And after that, CO consultant also will prepare it's according to their requirement, according to project manager or project lead convention. They will prepare separately, manually revenue elements and cost elements separately. Understood? These two differences: manual creation of cost elements and automatic creation of cost
Sir,
elements.
question.
Please.
So let's imagine that I'm got a job and as a consultant, they tell me that I'm the one who's controlling FI and CO.
Sorry?
But I forget to. Can you hear me?
Yeah, please.
Can you hear me? So when a person gets a job, imagine that the lead is saying that you'll be looking after FI and CO module both, or the both parts. But by mistake, we forgot to turn on this automatic creation of cost elements tab. Where in which transaction, or how would we come to know? Because we are definitely we're gonna end up making mistakes. How would we come to know that? Oh, I think we forgot to turn on the
See, once,
automatic
yeah, I
creation.
got it. Once we go to the CO module, okay, so the same methodology we follow in CO module also. So what is your job? You need to select automatic creation of cost elements. Okay, so once you generate you want to check the cost element accounts in CO module. If it is blank, then you have already created ledger accounts, revenue and income ledger accounts, sorry, expenditure and income accounts in FI module. And you are supposed to select automatic creation of cost element, but unfortunately you have selected manual creation. So when you entered into costing configuration, cost controlling configuration, so you are confident that okay, I have selected my automatic creation of cost element. But when you generate a cost element account report and it is showing blank, then what does it mean?
Forgot to turn it on.
Right? You forgot to turn, means which it's direct, it will indicate that you have not selected automatic
selected as a manual. Yeah.
You have selected manual account. Then you need to come back and you need to select automatic creation of elements. And you need to refresh the data, then automatically it will move.
Perfect. Thank you, sir.
Yeah. Okay. Fine. So here, so initially, again, that's the reason. Here I'll select for this particular project, I would like to select manual creation. So whatever question you asked, I'll explain there also in controlling model. So here initially I'll select manual creation of cost elements. Later, once we move to controlling module, then I'll show you, I'll create few elements. And after that, I'll select automatic creation of cost elements. Clear? So select.
So this can be turned on turn it on anytime.
Correct. Yeah, someone was asking
Okay.
question.
Yeah. Naveen, which one you select? It's a better one, like manual or automated?
See, that's what, projects are different. See, now what I saw is whatever projects I am handling, they are completely dedicated on FI module itself. So, but here it is always preferred to have automatic creation of cost elements only, because there is an integration between FI and CO. Right? So if we select this automatic creation of cost, again, you need not to come back. You need to select automatic, right? So instead of that, at the time of creation only, but the instructions you will get clearly what has to be selected, what has not supposed to be selected. Hope you got it. Yeah, you will get an instruction. If you are not involved in project discussion part, business blueprint or whatever, if you are not involved, directly you are started configuration, then definitely your project lead or project manager, okay, from your service side. So those people will update you what you have to select.
Okay.
Yeah.
So no, normally when I work, right, so I see whatever the GL number, whatever the FI GL number will be, the same will be there in the
CO.
element cost element as well.
Yeah, why?
So
Because
is that created automatically or it's created manually?
it
Like,
is, see, if
do
it is
we do
manually in the sense, probably we may have missed it. So the 100% they will select automatic.
okay, okay,
That's the
fine,
reason the
fine.
same GL you can find in FI and the
Mm,
same element you
mm.
can find in controlling module.
Okay.
Yeah.
Okay, got
So,
it.
but for our practice, initially I'm going to select manual. So I would like to show you the complete movement. If I select here
Okay.
automatically, then I don't have a scope, how it is moving, what purpose it is moving, I can't show it. So that is the reason
Okay.
for that particular purpose, I'm selecting manual creation of cost elements. Okay.
Okay. So yeah, future, like when we go through the SEO part, right?
Correct.
So
You
there
will
again you will
understand.
create the new one in the same T code, or it will be the different one.
I'll show you that codes are different in CO module.
Sure. 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 Thanks. Thanks, Navin.
Naveen,
Yes, sir.
sir, one doubt, sir.
Please, sir.
Sir, for example, if we are going to create the cost elements automatically, then at the time of creating GIL, will we give their cost element category in that area only?
I didn't get you. Can you please come again?
Sir, when we create the manual, when we are going to create the manual cost elements, na sir.
Right.
So at the time we are going to give the cost element categories.
Not here, not in FI module.
Okay. When we are going to create automatic, na sir, in that case, how?
The system automatically takes how we are going to define the expenditure, right? The expenditure, if what is rent comes under which kind of expenditure? For example, you say that administrative expenses and discount received, discount allowed. What kind of discount allowed? What kind of expenses? It's a finance expense, financial expense. So whatever account group you are going to do, in the same way that will be carried, the account groups will be carried to your cost accounting also, controlling also. So whatever segregations you have done, rent belongs to which kind, what kind of expense is that? So that is nothing but whatever expense we are giving here. So that will be automatically segregated as an element, administrative element, cost element, financial cost element. So that will automatically takes when we select this particular option. But if you are
Okay,
selecting manual creation, then okay, we need to do separately over there also. Clear? So here we are going to define account groups, next step. So over there we will define each, and that's the reason I won't give only for like asset accounting or liability accounting or expense account or income account. I am going to show you in depth of accounts. What are the items comes under current account? What are the items comes under administrative expenses? What are the items comes under financial expenses? Right? So in account groups, whatever we are going to define, which one is a financial expense, which one is the administrative expenses, right? So that expenses are nothing but that will move as an administrative cost elements or commission received, financial revenue element, like that it will get. Clear?
Yes, sir.
No? Yeah. Okay. So next one, click on save. So this is about your, so we have created HOCA. Remember this HOCA, Adani operational chart of accounts, maintain language, length, GL account 6, control integration, manual creation of cost elements. Click on save button. So what is Adani? So click on OK. So actually next step, we are going very slow. This step, I thought we will complete at least assign company code. So, okay, no problem. But first your questions need to be clarified because these are the basics. So you will get a lot of ifs and buts, a lot of questions. So no issues, you can ask, you can raise your concerns. Okay. And first 10 minutes, what we will do is first 10, you just keep it out your questions. And next day, first 10 minutes, we will spare for questions only. Okay, so we will see the next step in tomorrow's session. Tomorrow also it will take a lot of time because this is simple step, but here we will spend little time on account groups. Already manual account groups we have already done in yesterday's session accounting class. So which I have shared a recording also. So please go through once. Okay, any questions before we call it for today?
No, Naveen.
Thank you all.
Thank you very much.
Thank you.